Welcome back to First Trades. Flat for the equity markets. Trent, Dr. Reddy's, Ultratech, Grasim, Bharti, as well as Adani Ports and Reliance Industries all dragging their feet, while IT is in a better spot in comparison, and names like Bajaj Finance, Bajaj Finserv and SBI are holding out in trade. But moving on to our latest episode of Emerging Titans, where we caught up with Mr. Mariwala, the father and son duo, speaking extensively about the consumption slowdown in India, consumption trends, and quick commerce. Let's listen in to a slice of that conversation.
Consumption has actually stagnated, that's for sure.
Okay.
It's not increased. It may have increased at a very high. So there's a K-shaped
Affluent
kind
end.
of a impact of the economy on the rich and the poor. The rich have become far more richer, and the poor have got impacted, and partly because of unemployment, partly because of inflation. So actually the consumption figures show that it is stagnated, the consumption. And a lot of it has to do with macros in terms of the economy not providing enough income, growth in income, which again impacts consumption. But clearly there is an opportunity to improve that. And I think a lot will depend on how the economy does in future, in terms of employment, in terms of inflation, in terms of agriculture productivity, and if all that works out well, we should start seeing a positive cycle also.
Yeah, and that innovation is quite rampant, Rishabh, in the industry in the sense of what's happening to, let's say, the higher end of consumption or even distribution channels with respect to quick commerce, etc. Tell me the top 2 or 3 trends that have got you excited within consumption, because you've been looking at it with a very, very close lens for a while now. What are those 2 or 3 things that stand out to you, which make you feel that this is going to be the, let's say, next way of how people consume over the next decade?
Yeah, I think no, definitely. I mean, I was going to say the same thing. I think the rich are getting richer, and overall, in terms of even the risk profile is changing. So because there's more risk in the system, there's a appetite to go into, say, stocks, right, versus say something that's where you'll get a lesser return, right, but it's a riskier one. So that sort of emphasizes or reinforces the point that he was making about the rich getting richer, right? And then I think with that you see 2 or 3 things, right? You see premiumization going up, and you see luxury going up. So I think those trends are here to stay. If you see the quarterly results of some of the hotel industry or airline industries, they're all-time highs. So I think you're seeing that actually play out. And if I were to segment it further in terms of what are the few themes, I think coupled with, I mean, this is something that very much we do at Sharp, which is this whole like D2C thing, where again it's the demographics. So you do have that 18 to 45, right, who are actually consumers of these new age brands, and there's premiumization and luxury happening. There's masstige, premium, prestige, luxury. So I think at different stages you're getting consumption happening across different categories. Okay. I mean, of course it's beauty, personal care products. Of course it's things to do like with devices like wearables, or with food and beverage and QSR. I mean, you're seeing that happen all over the country. Number of coffee shops mushrooming, for example, or even in health tech, like our awareness of, I mean, post-COVID or whatever, we're just way more aware. So it's more prevention rather than just rather than a problem solution when there's
Correct.
something happened, right? And that's why diagnostic chains also are doing phenomenally well, during and post-COVID.
You picked up on that BPC point, so I just wanted to hash it out further. You're across the board, I mean, right from Honasa, Nykaa to Purple recently. What's making you that confident about this space? And also just to bring in the angle, just for the help of our viewers, when a stock like Honasa does crash the way it does, 40% lower, what goes through the mind of an investor like yourself?
Yeah, so definitely I think, Honasa was the sort of torchbearer, right, for D2C brands in the country. So for sure, I think the ecosystem does get a jolt. Right?
Yeah.
There's no denying that, including investors. But I think, look, after I'm on the board of Marico, and it's a once you do listing, I think these things sort of over time they become lessons, and I think this whole overstocking bit, right, that's happened, and it's all in
the
the
public
news, it's all
domain, yeah.
public. I think, can those be avoided? Of course. But is there anyone who's gone to that scale? And these are, let's be real, these brands are like, less than 10 years old, right? It's not like these brands are, 15, 20 years old. So I think these are lessons learned, and I think the entrepreneurs are resilient enough. The fact that they've actually gone IPO in a market like this and succeeded, I think they'll bounce back.
So you're not throwing in the towel yet. You're still committed to your investments there.
For sure, for sure. We are all in. We're all in. We are not, we don't believe that we've, in terms of our positions as well, we've not gone down on them. I think there's no reason not to do like beauty personal care, for example, because at first we were thinking, because a lot of our investments are in beauty personal care, and
Exactly.
thinking, are we doing too much of that? Is there too much concentration
Overexposure,
there?
yeah.
Yeah, but the reality is that no, you're actually seeing brands becoming 400-500 crores even today, right? And they're still growing, and you can question the unit economics and all that, but they're breaking even, and that journey is still continuing.
Since you were talking about innovation and how you have to really look at that, and we've all read those 4 P's of marketing, right? Product, placement, promotion, pricing. And they go through their own cycles. Which one do you think is the most important right now? Is it placement in terms of the distribution, the way quick commerce is disrupting, or do you think that's only a way of meeting demand and not really something that, companies like yourself in terms of Marico should focus on?
No, I think distribution, as you rightly put it, is going through a transformation, especially in big cities and even in mini metros also, because of the emergence of quick commerce, which is a big discontinuity. So organizations have to realize that, okay, they have to encash on this opportunity or how to mitigate the threat arising from that. And the threat comes in to your normal distribution channel, which is undergoing a huge impact. So you may have to redo your distribution strategies. Many of the retailers may shut shops, but that's reality, because what Q-commerce is offering is really unique in terms of not only just delivery in minutes, but discounted prices, anytime delivery during the day and night, also returns. All that is not offered by the grocer, so they have a unique advantage compared to grocer. So I think one will have to look at that, FU and FMCG, but the most important thing for any brand is the product itself.
Yeah, because you have parachute oil on one hand and you have that onion oil on the other hand at Mamaearth, and you're always confused which one to go for, the quality which has done well for you throughout, your life so far, or try something new. I think that conflict of interest might be something which is interesting. But just, talking a bit more about Marico in the sense, what are the next set of targets, let's say, that you have given to the leadership team there? What is your ask in terms of how the international geography should grow in? Which is the vertical that you are most confident about?
So I think every organization pivots, If I look at the journey of Marico from the time we started to today, we have pivoted many, many times, and we are also currently at a stage of what you call a transformation pivoting, So our new pivots are the foods. So we entered into foods a few days back, and that has to get accelerated. We have launched a whole range of masala oats and now muesli and millets, and we also prototyping some snacks also. So I think that's one, foods. Second is premiumization, because we are seeing that in the personal products, there is a tendency to go in for premium products. So that is second. Number 3, the D2C brands. We have acquired 4 D2C brands, and we have managed them or continuing to manage them in a different profit center, in a different team. So we need to succeed in that D2C. And then the international business also, we see an opportunity to expand international business to many other newer markets, as well as make acquisitions in existing markets and also launch newer products. And finally, the core, which is the old products, which is still very, very critical. So we have to maintain, if not, or grow, maybe not at the same rate, but still grow the core. So I would say these 5, and then on top of that, the sales transformation exercise, which is very, very important, because of this emergence of e-commerce, modern trade, and Q-com now. I think overall distribution scenario has changed quite a lot, and I think most organizations are re-looking at how can you make distribution far more effective in the context of all the changes which have happened.
If you like this video, then like, share and subscribe to ET Now.